Karen Kusher, Sydney off only slightly during the month. What part have regulators played in this, do you think?
Thanks, Elise. I think they've played a pretty big role. If we look at the peak of the market in terms of investment activity in New South Wales, investors were about 60% of all new mortgage lending. They've now pulled back to about 52%. And obviously, people that are looking to take out investment loans now are typically paying 60 basis points more than an owner-occupier. And if they want an interest-only mortgage, even more than that. So I think in a market like Sydney, where investment has been so rampant over the last few years, it's clearly played a big role in this pullback in the market.
Do you think this is the beginning of a bigger pullback in Sydney? Some banks have started to lend again to investors and interest only, but again, it's still much more reduced than it was.
I think we will see a further pullback from here, and as you said, there has been some rebound in investment lending lately, but you've still got the big challenge that Sydney's very unaffordable housing market, and even the unit market, which is still actually seeing growth at the moment. You're talking about unit prices that are typically quite similar to the cost of a house in Melbourne. So I think it's just got to that point where housing's so unaffordable now in Sydney that they've kind of exhausted the level of buyer appetite.
Speaking of affordability, Hobart has seen strong growth in house prices. It's also seen a big pickup in tourism. So how much of a role has that played, or is it more the sea changes, do you think?
I think it's a little bit of both. If you actually look at the migration trends to Tasmania, there has been a pickup in both overseas and interstate migration to Tassie more recently. And obviously, the lure of really affordable housing, both in Hobart and right across the state, I think is really attractive. Of course, businesses are very more accepting nowadays of people working remotely as well. So I think if you have the type of job where you don't necessarily need to be in Sydney or Melbourne, the fact that you can buy a property in Tasmania for about less than half the cost of a house in Sydney or Melbourne, I think that's very attractive for people in a position to be able to do that.
Certainly is. Regional areas outside of there, like Port Macquarie in New South Wales, are they doing well as a result of that as well?
We are seeing that. At the moment, the regions that tend to be the strongest outside of the capital cities are actually those areas closer to the major capital cities. So we're talking about Wollongong, we're talking about Newcastle, even Shoalhaven in Sydney. Port Macquarie is seeing some pretty reasonable growth at the moment. Also, the Gold and Sunshine Coasts are actually outperforming Brisbane, and even Geelong and the Surf Coast, we're starting to see some strong growth there. So I think we are starting to see evidence of that sea change, tree change phenomenon coming back. And obviously, people from Sydney or Melbourne have an awful lot of equity in their properties and seemingly aren't too concerned about using it at the moment.
So we're seeing a little bit of a divergence in the resource state capitals of Perth and Darwin. Perth, you think, may have hit the bottom, but Darwin, despite the huge falls, still has more to go?
Yeah, it's definitely looking that way. If we look in Perth, rather, you are seeing a pickup in the number of sales transactions happening in that market. We're seeing fewer properties actually coming to the market for sale, which is a good sign. We've seen a big pickup in first home buyer activity in WA over the last 6 to 12 months as well. So I think the market's very close to its bottom. We did see an increase over the month in values, but still over the year and over the quarter, values are down. Darwin, on the other hand, it's down about 19% from its peak, and we're just not seeing any sort of evidence that we're going to see the end of those falls anytime soon. So that market continues to struggle, whilst Perth, maybe the worst is behind it now.
For all those investors who have jumped into the market, how are rental prices treating them? How are returns going?
Well, in terms of rental yields, we have seen a really big compression of rental yields over the last few years because value growth, particularly in Sydney and Melbourne, has very much outstripped rental growth. But if we look at the last 12 months or so, rents in Sydney and Melbourne are both up about 4%, slightly higher than that in Melbourne. In Canberra and in Hobart, we're seeing rental growth of more than 5% over the last 12 months. So despite all the concerns about the excess housing stock coming online and all the new construction, we're actually seeing rents picking up in a number of these markets. Brisbane, Perth and Darwin are continuing to see rental rates fall, but I don't think a lot of people that have been investing have been thinking too much about the rental return. They've been chasing that capital growth. And obviously if Sydney and even Melbourne are starting to slow now and might see some falls going forward, I think investors need to be more focused on that rental return and not just that capital growth potential.
Cameron Cusher, thank you so much for joining the program.
Thanks, Elise.